Happy Friday, everybody. This is your market update for May 12th. I hope everybody is having a fantastic day and ready for the weekend. So, compared to the last few days, not a whole lot going on in the market today as it pertains to economic reports and news. No inflation reports coming out today, no labor information, nothing like that. Really, the primary report that came out today was the consumer sentiment report, which did in fact show that there is some souring in the sentiment of the consumer as it pertains to their feelings on the economy at this point in time. So that could be, because they're still fighting high cost inflation in certain areas. The market initially this morning, the stock market opened up slightly across the board. But I think when that consumer sentiment report came out, along with there's still some issues in the banking sector. Bank stocks, regional bank stocks are down on the day. There was a rally this morning with PacWest, but they quickly gave back any gains that were gained from that rally this morning. And then there's a focus on tensions between the U.S. and China right now too, which is weighing on the stock market. So currently the Dow is down 102, NASDAQ down 83, and S&P 500 down 19 on the day. Mortgage-backed securities had a good day yesterday, closed up 11 basis points, which were off their best levels of the day, but still maintained to stay above that triple level of which had been resistance that then turned into support. We've closed above that triple level of resistance the last couple of days. This morning, mortgage-backed securities opened the day down 5 basis points, basically sitting right on those levels of resistance. Unfortunately, we did have an instance not too long ago where the bond market did sell off. Mortgage-backed securities at one point in time around noon were down about 45 basis points. Now, since then, have rallied back, I think currently down about 31 basis points, but are now fighting that overhead level of resistance, trying to get back above it. And I'm not sure if that'll happen today. If we get a late afternoon rally, we wait and see. I guess if stock market continues to sell off, we could have, that could be, the bond market could be the beneficiary of that. So we'll wait and see. Next week is full of information, not to the extent that we've had the last couple of weeks, but on Tuesday we have retail sales numbers as well as housing market index. Wednesday is mortgage application information as well as new housing starts. And Thursday is the initial jobless claims for this week as well as existing home sales. Freddie Mac published rates came out yesterday afternoon, did show that mortgage rates had in fact declined slightly week over week. This week sitting, the 30-year is down 0.04%, sitting at 6.35% nationally. And the 15-year was down 0.01%, sitting at 5.75% nationally. So headed in the right direction, but we would like to see more substantial movement. And we do feel like that is in the cards potentially in the coming months, hopefully sooner than later. We'll continue to keep you updated. Have a great weekend. I'll see you on Monday.